The discussion was going about total income. So we started with receipts, no? Receipts during which year? From 1st April to whatever receipts you are having. All the receipts are your income, no? Yes, yes. Sure. All the receipts are not your, because receipts are of two types. One is definite source coming on a frequent or regular basis. Normally revenue receipts are your incomes. Yes or no? Under the Income Tax Act, revenue receipts are income. Now, if we talk about capital receipts don't come on a frequent basis. There is no regularity. So, capital receipts are normally not treated as your income until and unless specifically considered as income under the Income Tax Act. If the government wants to charge tax on your capital receipts, what the government will do? First, that capital receipt will be considered as your income. It will be covered in the definition of income. So the term income is also defined. So the definition of income is given under which section? Now, if you will see section 2 subsection 24 now, you will go mad. 2 subsection 24 defines income. Defines in an inclusive manner. Which manner? The term income includes. Why inclusive definition is there? Because the meaning of this term, government wants to widen the meaning of this term. Don't restrict your meaning to whatever you know. Because whatever you know is income, liable to tax. But whatever you don't know may also be treated as income if it is covered by section 2 subsection 24. Right or no? So now in the definition of income now, there are different types of receipts. The list is given. And that list is very big. Are you supposed to read this definition? The answer is no. Are you supposed to remember this definition? The answer is no. It is just a general knowledge which I am giving you. Understanding what I am trying to tell you? So under section 2 subsection 24, the term income includes. Many things are there. For example, I gave you the example of that lottery winnings. Do you remember? Lottery winnings will come to you on a regular basis or sometimes. But still it is treated as your, it is a capital receipt, but still it will be treated as your, why? Because it is covered in section 2 subsection 24. The definition of income also covers winnings, also cover lottery winnings, etc. Getting my point? So lottery winnings, etc. covered under the definition of income, hence they are treated as income. Did I give you the example of selling your asset? Gold was there, you are selling your gold, some land is there, some property is there, you are selling your asset. So the moment you are selling your asset, the moment you are, and you are getting some money, that is a receipt. Which type of receipt? Even that is your income. Why? Because it is covered by definition. Getting my point? So, see, under the Income Tax Act, normally the receipts which are revenue in nature, they are always treated as income. Always treated as what? But if there are capital receipts, those capital receipts, usually they are not your income. Usually they are not your, until and unless specifically covered as your income. Got it? Sure. So now what you will do? From 1st April of the previous year to 31st March of the previous year, whatever receipts have happened, you will identify all the receipts. And out of them, now you will identify that certain receipts are not treated as your income and certain receipts are treated as your. Now, which receipts will be treated as your income? Come on, tell me. All revenue receipts. Hello. And capital receipts which are specifically considered as your income will be covered as your income. Yes or no? Now, will you pay any tax on a receipt which is not your income? Sure, no? If you are getting a loan of rupees 5 lakhs, which is not your, will you pay income tax on that 5 lakhs? Why? Not your income. Income tax is a tax on income, no? Income tax is a tax on. So are you going to pay any tax on something which is not your? Will you pay any tax on that? Meaning, ignore all such receipts which are not your. Ignore all such receipts which are not your. So you will consider only those receipts which are your income. Got it, sir? Now, for example, now you are having some incomes in your hands. Now you have identified that, okay, this is my income, this is my income, this is my income. Under the Income Tax Act, this is also income. Under the Income Tax Act, this is also income. So you have identified all such receipts. Now, it is not necessary that government would want to charge tax on all your incomes. There is one section, section number 10. Which section? Of the Income Tax Act. Under section 10, there are certain incomes which are covered under section 10. On those incomes, the government does not want to charge any tax. They are known as exempt incomes. What will you call them? Exempt incomes are those incomes which the government does not want to charge tax on. Yes or no? So those are known as what incomes? So whenever you will calculate your total income, you will take all the receipts which are your income and which are not exempt. Which are not? Because exempt incomes will not go in the calculation of your total income, because on exempt incomes, the government does not want to charge tax. So now can I classify my income into two parts? Some incomes are exempt, I will forget them, and some incomes which are not exempt are known as taxable incomes. I will call them as. So from my income, I will do two parts. One is exempt incomes and another one is taxable incomes. So for the calculation of my total income, we switched off the AC. Why? Decrease the temperature, no, otherwise we'll die of suffocation. Sorry, don't decrease the temperature, increase the temperature, yes. Because if you decrease the temperature, she will freeze. Yes. Start, no, okay. Okay. Now see, all the taxable incomes we are supposed to consider. Which incomes? Exempt incomes we will ignore. We will consider the. So whenever you are going to calculate your total income in the assessment year, always consider those receipts which are your incomes and which are taxable. You will consider those receipts which are your and which are. Now by taking these taxable incomes only, your total income will be calculated. Yes or no? Now do one thing. Now tell me, will you take all the taxable incomes in the calculation of your total income? Normally yes, but all the taxable incomes will come in your total income calculation or not. Depends on two things. See. Receipts are my incomes. These incomes are taxable. So, will I take all the taxable incomes for the calculation of my total income? The answer is depends. Depends on two things. Number one, my residential status. And number two, the nature of that income. Which you are going to learn in chapter number 2. In the chapter number 2, no, you learn this thing from me. Yes or no? Now tell me. Number one, residential status I will have to determine. Residential status of the assessee. That assessee is a resident or a non-resident. How to determine that he is a resident or a Non-resident. That is given in section number 6. So in the chapter number 2, we are going to learn that. Okay, no? Now, number 1, residential status of the assessee. And number 2, nature of the income. Whether the income is Indian income or foreign income. That will also be decided. So once I'll come to know that the income is Indian income, this taxable income is Indian income, then will it be included? Will it not be included? Once I know that the income is foreign income, then will that income be included? Will that income be not included? Yes or no? So all these things we are going to learn in chapter number 2. Which taxable incomes are going to be covered in the calculation of your total income and which are to be left out. Getting my point? So based on 2 things. What did I say? Now, after I have identified my taxable incomes, I will check taxable incomes are included in the computation, included in the of included, yes, included, but this yes or no depends on 2 things. Depends on residential and nature of income. Residential status of assessee. Residential status of assessee. Okay. And the nature of, based on these 2 things, it will be decided that the taxable income will be included or the taxable income will not be. Now come on, based on these 2 things, I came to know that there are certain taxable incomes which are to be included. And there are certain taxable incomes which are not to be. So the incomes which are not to be included in the computation of my total income, will I consider those income or I will ignore those income? I will ignore. So now can I say what all things you will ignore? Number 1, ignore all the receipts which are not your, you will ignore them. Ignore all those incomes which are exempt, ignore them. And ignore all those taxable incomes. What did I say? Ignore all those taxable incomes which are not covered in the scope of your total income. This is known as scope of your total income. In the computation of your total income, what incomes will be covered and what incomes will not be covered. It is known as scope of your total income. What will you call it? So the incomes which are covered in your scope of total income, you will include them. The incomes which are not covered in the scope of your total income, you will ignore them. But that depends on 2 things, your residential status and nature of income. Got it, sir? So you will ignore these incomes also, but you will consider these incomes. Now take these incomes and take these incomes in the calculation of your total income. Understanding? But wait. Now the incomes which are covered in your scope, the incomes which are covered in your will be classified under 5 heads of incomes. It is not necessary that you are going to take all the incomes together and add. No. First of all, the incomes which are covered in the scope of your total income, no, they are taxable incomes. But now all these incomes, you are supposed to identify, okay, this income will go to this head. This income will go to this head. You will have to identify the heads under which you will classify these taxable incomes. Yes or no? So how many heads of income are there? 5 heads. I will name these heads. First is salaries. Second is house property. Third is profits and gains from business or profession. So I will call it business and profession head. Okay, business or profession head. And fourth is capital gains. And last one is residuary other sources. 1, 2, 3, 4 and 5. Few incomes will be classified under salary head. Few incomes will be covered under house. Few incomes will be covered in business or profession head. Few will be covered in, and the incomes which remains, which cannot be classified under the earlier four heads, there is a residuary head known as other sources. All such incomes will be classified under the last head, income from other sources. Yes or no? Now, have you classified your incomes? Have you classified your incomes? Now, by taking these incomes under these heads, the income of the heads will be calculated. Income of the, so first few incomes will go to, from that the income of salary head will be calculated. Few incomes will go to, from that income of house property head will be calculated. Likewise, business and profession, capital gain, and now what you will do? You have calculated all the five heads. Yes or no? Now aggregation will be done. What will be done? Aggregation means total. So when you total all these five heads, when you total all these, a grand total will come. But wait, while totaling, you are supposed to do two more things. While aggregating, you are supposed to do two more things. You are supposed to consider provisions of clubbing and set off and carry forward while doing the total. Which provisions you will consider? Clubbing as well as set off and carry forward. Clubbing means, in simple words, income of other persons will be included in your total income. Sir, we don't pay tax on our income. You are telling us to pay tax on the income of? Don't worry, there are provisions. When in the computation of your total income, income of other persons are also included. On those incomes, that person is not liable to pay tax. Who is liable to pay tax? Assessee. You are liable to pay tax on that income. Please include that income in the calculation of your total income. So while aggregating, include these incomes also. This is known as what? Clubbing. This is known as, clubbing means to add something. When you add something, that is known as clubbing. Yes or no? Now, what are these provisions? We are going to learn. Yes or no? Now, sometimes it might be possible that when you are calculating the heads, so you will take some incomes under a head. And from that income, there will be some deductions given under that head. Yes or no? For example, if I have business income, so I will classify that business income under the head business or profession. But out of that business income, which I have classified under the business head, there will be some deductions which will be available to me. Example, all the expenses which I will incur in the course of my business or profession will be allowed as a deduction. So it is not necessary that the expenses which I might incur are less than the income. It can be more than the income also. I am running a business. From that business, I am doing a sales of rupees 5 lakhs. Possible? So during the year, I did one business. I was engaged in one business. From that business, I am earning 5 lakh rupees. I did a sales of rupees 5 lakhs. But to do this sales of rupees 5 lakhs, I had to spend 6 lakhs. 6 lakh is an expense incurred to earn 5 lakhs. So 5 lakhs is the taxable income minus the deductions of rupees 6 lakhs. Positive income or negative income? 1 lakh negative. So now the business or profession is positive or negative? What will you do with this? Set off. What will you do with? Set off. And if it cannot be set off, it will be carried forward to subsequent year for set off in subsequent years. Getting my point? So there are set off and carry forward. Under the different heads, all the 5 heads are given, no? Under the different heads, there is a possibility that because of the deductions which are available under that head, deductions becoming more as compared to the taxable income. I will classify the taxable income under a head. Tell me yes or no. I will classify a taxable income under one head. Out of that taxable income, under that head, some deductions are also given. If those deductions exceed, the taxable income, the resulting income is negative income. That is a loss. So there are provisions for set off of such losses, for carry forward of such losses. I will have to take care of those provisions also while doing this total. Getting my point, everyone? Now what will be the total? Total is 5 heads. While adding the 5 heads, I considered the provisions of clubbing also. I considered the provisions of set off and carry forward also. Then the total amount which is there, no, this is known as gross total. This is known as, again, once more, this is the amount on which you are supposed to pay. No. You are supposed to pay tax on total income. This is gross total income. So from this gross total income, you are going to get deductions, separate deductions, which are given under chapter 6A, starting from 80C to 80U. These deductions you are going to take. From the gross total income, you will take these deductions. Now the final amount remaining is known as your, and this is the amount on which you are going to apply tax rates. So a value and rate. Value on which the tax will be charged is known as total income. Is known as, and how to calculate this total income? This entire process you are supposed to follow. Getting my point? And this is a process which is to be followed only for individuals or for all types of persons. Yes, for all types of persons, the same process you are supposed to follow. Identify the receipts. Out of those receipts, there are certain receipts which are income. Out of such incomes, there are certain incomes which are exempt. Forget about those incomes. Yes or no? Only the taxable incomes can be considered to compute your total income. But not all taxable incomes will be considered to calculate your total income. Only those taxable incomes will be considered which are covered in your scope of total income, which depends on two things: residential status and scope, residential status and nature of your income. Based on that, certain taxable incomes will be covered in the scope of your total income. Now the incomes which are covered in your scope will be classified under 5 heads of income. 5 heads of income, the incomes are classified, and from those incomes you are supposed to calculate 5 heads of income, taxable income of those 5 heads. Now add the taxable income of those 5 heads, you will get gross total income. But remember, while aggregating the 5 heads of income, while totaling the 5 heads of income, you are supposed to give effect to clubbing provisions as well as set off and carry forward provisions. The total will be gross total income. From that, you are going to take chapter 6A deductions given under section 80C to 80U. Then the final amount remaining will be your. This is the method. This is the process which you are supposed to follow. Please don't ever try to shuffle the order. Don't ever try to forget this. Now, what I'm trying to tell you, the entire syllabus of CA intermediate is in front of you. Yesterday I started your taxation lectures. I did not tell you that what all things you are going to study in the income tax. You should have asked me yesterday, sir, how many chapters are there? What all things I am going to learn? All these things you are going to learn. Chapter number 1, which we are doing right now, is introduction and basic concept. This is required to make your base for the entire income tax which you are going to learn. Yes or no? So once this base is done, we will enter into chapter number. Chapter number is on residential status and scope of. That is your chapter number. Now from that chapter, what you are going to learn? that which taxable incomes are going to come in the computation of your total income and which incomes you will leave. Meaning the incomes which are covered in the scope of your total income depends on residential status. You learn how to determine the residential status. You learn which incomes to take, which incomes to leave. Yes or no? Now, after chapter number 2, you will be at this stage. You will be at, now, few incomes are to be classified under, all the incomes are classified under 5 heads. So, out of those incomes, which incomes will be classified under? Salary head. And by taking those incomes, how will you calculate? Salary income will be your next chapter. Few incomes you will classify under house property head. By taking those incomes, how will you calculate? House property head income. That will be your next chapter. Then PGBP, profits and gains from business or profession. Then capital gains. Then each head is a separate chapter. Now 5 heads are done. Will you total now? But clubbing is to be taken care of. Clubbing is a separate chapter. Set off and carry forward. That is also a separate chapter. Then you will get the amount of gross total income. Then deductions under chapter. This will be your separate chapter. Till that chapter. Till that you are supposed to learn each and everything. Then only you will be in a position to calculate the, which is 15 marks question in your examination. First question, compulsory question. Do you remember yesterday I told you the paper pattern? Question number 1 is compulsory question of how many marks? 15. That 15 marks question is on computation of total income. And don't you think in that first question only you will be tested for your entire syllabus? Because it will be combination of all the things taken together. So till the time you don't learn all these things properly, in detail, each and everything conceptually not clear, you will not be in a position to calculate the total income. That means 15 marks question, forget about that. You will not be able to attempt that question. And that is the reason why this, direct tax is a subject from which people are, getting afraid of. Because first 15 mark question only is so difficult. And sir, we are habituated of doing selective study. This chapter is important, I will do this chapter. This chapter is not important, I will not do this chapter. You cannot leave a single chapter in option if you want to attempt the first compulsory question. And in that first compulsory question, not just total income, they will ask you to calculate the tax liability also. So now from here the process will, proceed. We will proceed ahead to calculate the tax liability, because tax is nothing but value into rate. Value into is equal to tax, no? So what is the value on which the tax is to be charged? Total income. How to calculate this total income? Did you understand the entire process? Yes or no? Now on this value we will apply the rates. On this value we will apply the, but before that, whatever we have studied, let's see how it is there in our notes. Assessment year, previous year done. Definition of, now read this definition. Total income, total of, referred in section, computed in the manner, that is total income. Did you understand anything? This is the same thing which they want to tell you. Total income means total of incomes referred in section, scope of total income. What did I say? Those incomes which are covered in your scope of total income. Section 5. Yes or no? Total of all those incomes. But the total of all those incomes which you have computed in the, what is the manner prescribed? Headwise calculation. Headwise. So first of all, identify all those incomes which are covered in your scope. First of all, identify all those incomes which are covered in your, classify them into 5 heads and compute the income of those 5 heads. Yes or no? This is the manner prescribed. And where it is prescribed? Section 14 prescribes the manner of computing your total income in headwise manner. In which manner? Headwise manner. Meaning all those incomes which are covered in your scope will be classified under 5 heads, and the taxable income of those 5 heads will be calculated, and those 5 heads income which you have calculated will now be added, will be total, minus the chapter 6a deductions, will give you the income which is known as total income. This is the definition of section 2 subsection 45 of total income. Yes or no? Will you remember this? So please pay attention. Note, incomes referred to in section are the which are covered in the based on the time of accrual or receipt thereof, meaning nature of income, and residential status of the, based on this thing, whatever incomes are covered in your scope, they are section 5 incomes. Yes or no? Next one, the manner laid down under the income tax for computation of is as under. What is the manner laid down? Calculate the gross total income. Chapter 6a, you will get the, how will you calculate the gross total income? You will aggregate the incomes calculated under, which are the 5 heads? Now all the incomes you are supposed to add. But wait, while adding, don't forget the clubbing provisions, don't forget the set off. Now you are going to get gross total income. From that chapter 6a, deductions from 80C to 80, you will get the charge of income tax is on this amount. You are going to apply the tax rates. The income tax is charged on total income and not on the gross total income. Getting my point? Now pay attention. While aggregating the incomes under 5 heads, effect must be given to and provisions related to and the set off and carry forward of losses. Yes or no? Now pay attention. This entire thing I have explained. Are you comfortable with this? Will you forget this process? So from today onwards, from tomorrow onwards, the chapters which we are going to start now, each and every chapter you are supposed to learn with me in detail. Each and everything we will learn in detail. Slowly, gradually, with examples wherever required. I will, and one by one, we'll learn each and every chapter. Understand, you are moving your steps forward to total income. Total income questions we will start in the end of the DT syllabus. Why? Because till the time I am not finishing off with the parts, I cannot calculate the total income. Getting my point? So one by one, every part is important. So I would request all of you to be attentive in the class, but don't miss a single class. Because see, one class if you will miss, I have a habit of connecting the things. The thing which I am teaching you right now, you won't even imagine these same things I will give reference in subsequent lectures also. Say for example, in lecture number 20, I will give example of today's lecture. At that time, there is some important concept which is going to be done. In that concept, today's reference is required. And if you understand that today's reference, only then you will understand that concept that time. But today's lecture you have missed. If you have missed today's lecture, will you understand the explanation which I will give at that time? So that concept is gone. Now don't think that concept will not come again. That concept will have applicability somewhere else. So do you understand? It has an effect everywhere you go. So if you miss a single lecture, what will happen? You will not understand the subsequent things. So don't miss a single lecture. And even if you miss it at your own risk. Then I am not liable for anything. But if you will not miss a single lecture, trust me on this. Direct tax 50 marks paper is there, no? You will have a confidence of scoring minimum 45 marks. That is my guarantee. By the time my syllabus will be over, no? You will have a confidence of scoring minimum 45 marks. But for that, you will have to be with me. Ready? Should I move ahead? Have you calculated total income? Have you calculated total income? Yes. Now, calculate the tax also. How will you calculate the tax? Yes. So there are some rates. Those rates which you are supposed to apply on the total income. So we are supposed to understand those rates now. Getting my point? Pay attention. See, the process which I told you, no? The detailed process I have given. Receipts, revenue receipts, capital receipts. Some receipts are your income. Some receipts are not your income. Everything which I am speaking is there in my notes. Don't worry about that. Okay, no? Now pay attention. Important points to remember. I will do this point. First, point number 1. Read. Income ordinarily means something which is received from a, however the term income is also under section to include certain specific receipts as, so that such receipt could be charged to. Hence, it could be said that the meaning of the term income is much wider than what is normally. Yes or no? This thing I have already explained. Next one. As and when the government wish to charge tax on a which otherwise may not be, it amends section and includes such receipt in the definition of and creates a charge on it under any of the. Did you understand? Whenever the government wants to charge tax on any receipt which otherwise is not your income. See, you are getting some receipt, capital receipt, not your income. So you are not liable to pay tax on that. But the government is very firm that the government wants to charge tax on that receipt. So what the government will do? Government will cover this receipt in the definition of income. First, the receipt will be made as your income and only then the income tax can be charged. Getting my point? Hello? Now, receipts can be in cash, can be in. Now see, by income, what do you mean by income? If I give you some cash, is your income? Is it your income? Yes. Something which you receive in cash is your income, no? But can you receive something in kind also? Can you receive something in? Under the Income Tax Act, sometimes the receipts which are in kind are also treated as. So don't get surprised if I say you got house, no, from your employer. Hello, your employer is giving you house to stay. That is your income. I did not get any money. I did not get any money or cash from my employer. My employer is giving me house to stay. Still, you are receiving something in kind. Benefit is happening to you, no? That benefit, that receipt in kind will also be treated as your income. For example, I'm a doctor. Example, huh? I'm a doctor. I treat the patients. Now, some patients are coming. I'm giving them the treatment. So, they are giving me my fees. Can I get my fees in cash? Is that my income? Taxable. But can I get my fees in kind? Can I get my fees in kind? How come? One patient came, he was very ill, very sick. He was about to die. But I treated him so well now, he survived. He became well. So he got so happy, he gave me a chain worth 50,000 rupees. Is he giving me 50,000 rupees or 50,000 worth of chain? Even that chain which is coming to me is my income. So under the Income Tax Act, not just the incomes which are received in cash will be taxable, but sometimes there are certain receipts in kind. They are known as your non-monetary receipts. They are known as your, even they will be treated as your, and their valuation will be done and their value will be treated as your income, and on that also you are supposed to pay tax. Sometimes this might also happen. So see, before we actually go to the chapters, So for example, if I'll be doing PGBP with you, which chapter? So under the PGBP head, if I tell you that see, something in kind no is also your PGBP income. How come? So I will tell you. Do you remember my second lecture? In my second lecture, I told you not just the monetary incomes, but the non-monetary receipts are also treated as your income. This is a non-monetary receipt which is getting charged under the head PGBP, because in the course of your business or profession, whatever monetary things you are getting, that is also your income. Whatever non-monetary benefits you are getting, that is also your income. Got it, sir? Under the salary head also it can happen. So please remove this thing from your mind that when you get something in cash, only that is your income. Hello, that is a misconception. Under the Income Tax Act, something which you receive in kind, that means your non-monetary receipts, that can also be treated as your income, and you are supposed to pay tax on that also. Got it, sir? So now what is written? Now for these non-monetary receipts, no valuation is required. For example, did I give a house to my employee? Did I give a house to my employee? It is something in kind given to my employee. So my employee is receiving something in kind. Benefit is happening. How much? Because that benefit is income for the employee. That benefit is income for the employee. But how much? Valuation will be done. So for that, income tax rules will be followed. What will be followed? Income tax rules will tell you that how much value of this benefit will be treated as your income. So as per the income tax rules, I will have to do the valuation, and that value will be treated as my income. Understanding? Hello, sir? But sometimes it is not given in the income tax rules. Sometimes some non-monetary receipts are there. Sometimes some non-monetary receipts are there, but its valuation is not given in income tax rules. So that time the fair market value, that time the fair market of that benefit of that receipt in kind will be treated as income. Will you remember? So value needs to be for what? For non-monetary receipts. The value needs to be determined as per the prescribed valuation. If no rules are prescribed for valuation, then fair market value may also be adopted. Will you remember? So this is third point. Yes or no? Now coming to the fourth point. Under the Income Tax Act, incomes earned during the previous year should be real incomes. Really, you are earning the income. That should be your real income. Real income. For example, if my tenant to whom I am giving my property on rent, if he is giving me rent, I am really earning rent, actually earning rent. So the income which I am earning actually, in reality, that real income is charged to tax. But sometimes, what did I say? Some fictional or notional amount can also be treated as my income. Sometimes a fictional or a notional amount, an imaginary amount can also be treated as my income. And when that will happen, I will tell you. But see, always the real incomes are taxable. The income which you earn in real, income which you earn actually, are taxable under the Income Tax Act. But sometimes, to safeguard the interest of the revenue, you don't do something wrong with the government, hello, or to give you some benefit, the government might tell you, the law might tell you to consider a notional amount, an imaginary amount as your income. So at that time, that notional amount, that imaginary amount, that fictional amount can also be treated as your income. Be ready to consider such things also as your income under the Income Tax Act. Whenever that thing will come, I will tell you, this is not your real income. This is a fictional amount. This is a notional amount getting considered as your income. See, I was talking about this thing. I will give today's lecture's reference. Will you remember this? So under the Income Tax Act, income can be monetary, it can be non-monetary also. Income can be real, it can be fictional or a notional amount also. Yes or no? Next one. Income can be earned on or it can be earned on. For example, what is my profession? I'm a chartered accountant, practicing chartered accountant, and a teacher also. So on a permanent basis, meaning on a regular basis, on a recurring basis, on a permanent basis, I'm earning income from my CA profession, income from my teaching profession. This is an income having some permanency. Permanency means some regularity. So on a permanent basis, I'm earning this income. Yes or no? If I'm working in some organization as an employee, so will I get a salary on a permanent basis on a regular basis? So there is some permanency in that income which I'm getting. Yes or no? So I can say that okay, this income I'm earning on a permanent basis. I might have some bank accounts from which I might get what? Interest. I might have some property which I have given on rent. I might earn rental income on a permanent basis, meaning there is some regularity. Hello. So only those incomes which you earn on a permanent basis will be charged to tax, or those incomes which you earn on a temporary basis can also be taxed. Incomes which you earn on a temporary basis can also be charged to tax. Yes or no? Hello, sir. Next one. Income can be earned in, or it can be earned in. It will not make any difference. If you are earning income, so that income, whether you receive that income at one go in lump sum, or whether you receive that income in parts in the form of installments, will not make any difference. You are supposed to pay tax on the entire amount of income. Yes or no? So income can be earned in installments, income can be earned as a lump sum also. Yes or no? Now, income can be, or income can be. See, our law is blind. You have heard this thing? Law is blind. In Hindi, it is said that कानून अंधा होता है. Law is blind. It does not differentiate. Is it your income? Is it your income? Yes. So you are supposed to pay income tax on that. Whether you are earning that on a permanent basis or a temporary basis will not make any difference. Whether it is a monetary or a non-monetary income will not make any difference. Hello? Whether it is real or fictional will not make any difference. Hello? But can I say whether it is legal or illegal will not make any difference. Some income you earn some incomes you legally earn. So the income earned by doing some legal activities is taxable. So income earned by doing illegal activities will also be taxable. Ayo sir, illegal activity. Government is not promoting illegal activities. Hello. We don't want to promote the illegal activities. Just imagine if the income from illegal activities is not taxed. I will never teach. I will do all the illegal activities. See, today I am teaching you. Teaching students is an illegal activity or a legal thing I am doing. This is a legal thing, no? Teaching someone and teaching and earning income. Is it a legal income? Should I pay tax on that? Yes. Just imagine if there was no tax on illegal incomes. I have murdered someone for money. Hello. I am stealing some money from the bank. I am a thief. I'm doing some robbery, etc. I'm selling those drugs, etc. These are all legal activities or illegal activities. And if I am doing such illegal activities, from those illegal activities also I am earning income, no? Should I pay tax on them? Should I pay tax on them? See, I will not go on my own to tell the government that in this financial year I have done 3 murders. Okay, I have sold this much drugs. Income under the head PGBP 5 lakh rupees. I am paying tax. I will not go on my own. Hello. But what if they catch me? If they catch me, they will catch the income also, no? Which I might have earned by doing such illegal activities. So can they charge tax on those incomes which they might have come to know after catching me? Yes. Because the Income Tax Act does not differentiate between a legal income and illegal income. Even an income which you are earning on an illegal basis comes in the notice of the income tax department, the department can very well charge tax on that illegal income also, because if that is not taxed, nobody in India will earn legally. Everybody will earn illegally. And just imagine if everybody starts earning illegally, what will be the situation? Everywhere murders are happening, drugs are being sold, all types of illegal activities are happening. You will catch someone, doing some wrong thing. Yo, why are you doing such wrong things? Not supposed to do all such things. That poor fellow will say, I tried doing good things. I tried earning income through legal means. But when I was earning legal incomes, the government was charging tax on me. So I thought of earning incomes illegally. That is why I am doing this. Everyone will start doing illegal activities. Getting my point or not? So the Income Tax Act does not differentiate or discriminate between a legal income or illegal income. Even your illegal income, when the government catches you, when the government finds that you are earning some income on illegal basis, that illegal incomes can also be charged to tax. Will you remember this? Hello, sir. Now, if the income from any source is earned then such income shall be chargeable to tax during the, even if such source of income ceases to exist during the. What does this mean? During the previous year, if you have a source of income, from that source of income you are earning that income is liable to be taxed during the, whether you are having this source of income during the assessment year or not, will not make any difference. The source of income should exist in the previous year. Getting my point? So in the previous year, do you have a source of income? Yes. From that source of income, have you earned the income? Yes. On that income, you are supposed to compulsorily pay tax during the assessment year. Whether you are having that source of income in the assessment year or not, will not make any difference. Will you remember this much? Sure, sir. Should I move ahead? Very good, sir. Now, income under the Income Tax Act can be, if positive, then it is chargeable to, if negative, then, did I give you that example? Do you remember? 5 lakh rupees income from business, taxable under the business head. And to earn this 5 lakh rupees, I spent, so expenses in the course of business, 6 lakh. So from 5 lakhs, which is taxable under the business head, I will get 6 lakh rupees of deduction under the business head, resulting into a positive taxable income or a negative income. That is a loss. So under the Income Tax Act, it is not necessary that the resulting income will always be positive. It can be, and negative income is always because of deductions becoming more as compared to your taxable income. Getting my point? And in that case, that negative income will be considered for set off and carry forward. Separate chapter is there. And in that chapter, we will learn that what to do about these negative incomes. Will you remember this much? Now, pin money. Tell me, in our homes, we have Appa and Amma, right now? Amma is a housewife, usually. Hello? Majority of us, we all have mother. And our mothers are not working. Majority of us. Yes or no? Especially if I talk about myself, my mother is not working. She's a housewife. When I was a kid, I used to see that my mother takes care of the household. My mother takes care of the, and earning part is taken care of by my father. Father earns the income. Hello? And mother takes care of the household. Now, don't you think if mother is not earning the income, the mother will require some money for her own expenses? Like she wants to buy a dress, she wants to buy sari, etc. There are beauty parlor expenses. Hello? Some jewelry, imitation jewelry, she will buy. There are certain personal expenses of that wife also, no? So what my father used to do, my father used to earn income, and out of that income, some income my father used to give every month to my mother to meet her personal expenses and to meet the household expenses also. See, this much amount I am giving for newspaper, this much amount for the grocery, this much amount for electricity bill, this much amount for milkman, see this extra amount you keep for your dress, etc. So every month some amount is given by the husband to the wife to meet the household expenses as well as the expenses of personal nature of the wife. That amount is known as pin money. That amount is known as pin money is nothing but the amount received by the wife from the husband to meet her personal expenses and the expenses of the household. Yes or no? Tell me, is that pin money received by the wife treated as taxable income in the hands of wife? The answer is no. This pin money is not treated as income of the wife, therefore not taxable in her hands. Because it is already out of the taxable income of the husband, no? Husband is earning income, hello? And out of that income, if he is giving something to wife as a pin money, why that amount should be treated as wife's income? Just imagine if that income, that amount is treated as wife's income, what will happen? Every wife will be on the streets agitating against the government. The government will be out of the power. Hello, wives are very powerful. Husbands cannot do anything. What the government will do? Hello, getting my point? So whenever you see pin money, what will you do? Ignore. Why? Because under the Income Tax Act, pin money received by the wife from the husband is not treated as income of the wife. Yes or no? Now, do you know the difference between gross total income and total income? Do you know the difference? Read it. Same difference. Gross total income is total before, what did I say? Claiming. And after you claim chapter 6 deduction, whatever remains is. So tax rate is to be applied on gross total income or it is to be applied on total income? Very good. Now see, there is a concept of diversion of income, and this concept I will do with another chapter. Right now I am keeping this concept pending because this concept will make sense under the head salaries. Under the head, I will explain this concept. Don't worry about that. Okay. Now moving ahead. Today I have used these two words. Exemption. What is the difference? I will not show you. Tell me. Whatever I have discussed so far and whatever you remember, based on that, tell me what is the difference between exemption and deduction? Exemption is not considered in computation of, can I say exemption is your income only on which the government does not want to charge? Meaning the income on which the government does not want to charge. Will you consider this income to calculate your total income? Will it go to any of the 5 heads or you will take it out of the calculation? Will it ever go to the calculation of your total income? So the income which is not forming part of the computation of your total income is exempt income. Hello? For example, you are earning 1 lakh rupees. Income 1 lakh rupees. So how much can be exempt? Either the entire 1 lakh or out of 1 lakh, some amount will be exempt. Hello? Either the entire 1 lakh will be exempt or some part out of 1 lakh will be exempt. No? Hello? Government will say, you are earning how much? 1 lakh. Go, entire 1 lakh exempt. Or the government will say, how much you are earning? 1 lakh. Go, 80,000 exempt. Then in that case, 20,000 will be taxable. Getting my point? That 20,000 will go in the computation of total income, but 80,000 will not go in the computation of total income. But what if the government says 1 lakh is exempt? Entire 1 lakh will not be taken for the computation of total income. This is known as exemption. Yes or no? Exemption cannot be more than income. If your income is 1 lakh, government can give you the exemption of Can the government exempt 5 lakhs? If you are earning 1 lakh, take the exemption of 1 lakh. No. The government is not going to give you exemption more than the amount of income. So can I say, if 1 lakh is my income, hello, 1 lakh is my, so can I say 1 lakh can be exempt? Hello? In that case, taxable income is, nothing will go in the computation of total income. Sure, sir. Can I say 1 lakh is my income? Government can exempt? 80,000 out of 1 lakh will not go in the computation of my total income, but remaining 20,000 which is not exempted by the government will go in the computation of my, yes or no? Now can I say 1 lakh is my income and government is saying 1,50,000 exempt, negative 50,000. If you do such things, no, I will come in the exam. Then in that time I will give you a tight slap. Just close your eyes before you do all such things and visualize I am standing beside you. I will watch everything in the exam. Whatever you are doing in the exam, I will be there. Don't do such thing. Exemption will be equal to income, or it can be less than your income. It cannot be more. It can never be more than your income. Because of exemption, there cannot be a negative income. Hello. And in short, in simple words, no, exemption is nothing but income on which the government does not want to charge tax. It can be either the entire income or out of that income, some part of income. Yes or no? On the contrary, deduction is a little bit different concept. What is deduction? Taxable income going in the calculation of your total income. Hello. And out of that, something is reduced. That is known as deduction. So deduction is available from taxable income once the taxable income goes in the computation of total income. Once the taxable income goes in the computation of, from that taxable income, whatever amount is reduced while calculating the total income, that is known as deduction. So can I say, out of 1 lakh rupees of income, 40,000 rupees reduced? 40,000 is your deduction, now resulting into, so in the computation of your total income, how much you took? 1 lakh. From that 1 lakh, government allowed you how much? 40,000. Reduce 40,000. That 40,000 is your deduction. How much remaining now? So in your total income calculation, now entire 1 lakh will not be taxed, only 60,000 will be taxed. Yes or no? Now, can I say 1 lakh you are taking in the calculation of your total income under any of the heads, 1 lakh rupees is going. But out of that, you are getting a deduction of 1 lakh. Possible? So you took 1 lakh in the calculation, and fortunately 1 lakh was allowed as a deduction also. So how much is remaining taxable? So first you take 1 lakh, and out of that 1 lakh you take the deduction of 1 lakh. Now nothing is taxable. Yes or no? Now tell me, you took 1 lakh in the calculation of your total income under any of the heads. Yes or no? But out of that 1,25,000 got allowed. Is this thing possible? Yes. And this may result into loss. And for this, set off and carry forward provisions are there. So under the set off and carry forward provision, whatever loss will be adjusted, that loss is nothing but excess of deduction over and above taxable income while calculating your total income. Getting my point? So can your deductions be more than your taxable income, resulting into a loss? Can your deductions be equal to your taxable income? Yes, resulting into no taxable income. Yes or no? Can your deductions be lower than your taxable income, resulting into remaining positive taxable income? Getting my point, everyone? Understood? Very good. Now pay attention. Pay attention. Deduction and exemption difference is done. Okay. See, this exactly same thing I have explained. Now, process of determining the, now, very interesting things. First of all, tell me, to calculate the total income, the entire process we have seen. You all are comfortable with that process? Now, once your total income you calculate, total income. Now you are supposed to apply the tax rate on this total income. Now, first of all, remember, there are two types of tax rates. How many types? Special tax rates and normal tax rates. Which tax rates? And in your total income, there are some special incomes. Separate them. Which incomes are special incomes? I have not yet taught you, but I can give you examples. These incomes we are going to learn later on, yes or no? But I can give you some examples. Winnings from lottery, betting, gambling, horse races, yes or no? Online money gaming. So when you participate in all such things, you bet your money, you win something, you take a lottery ticket, lottery, you win some amount. So all these winnings incomes are there, no? All these winnings will give you some income. That winnings income is a special type of income. Is it taxable? Yes, it is taxable. You are supposed to charge the winning income under the head, income from other sources. This is your income from other sources income, yes or no? So can I say you have shown your winnings income under the head other sources, meaning your winnings income is there in your total income. So when you calculate your total income, in your total income, you might have shown your winnings income. That is a special income. Separate that. Special income, special tax rate is given for that. Taxable at 30%. How much rate? There is one section in Income Tax Act, section 115BB. Which section? Just try to remember these things right now. You will have a proper basic in-depth idea about all these things in later on chapters. But the concept which I want to convey right now, to convey that concept, I need to speak these things right now. But that does not mean that I have completed all these things. Yes or no? I'm just giving you some examples. We are going to learn these things in detail later on. But right now, did you understand winnings? Hello? There is one section in Income Tax Act, 115BB. 115? That section says on your winnings income, the rate of tax will be 30%. So under the Income Tax Act only, there is one section, section 115BB, which says that how much tax you are supposed to pay on this income. 30%. Hello? Then there are certain long-term capital gains. There are certain short-term capital gains. Long-term capital gains, tax rate is 12.5%. How much? On some long-term capital gains, the tax rate is 12.5%. After that long-term capital gain is, the long-term capital gain is in excess of 1,25,000. See, some long-term capital gains are fully taxable at 12.5% rate. Some long-term capital gains are taxable only if they are more than 1,25,000. Yes or no? So all these long-term capital gain, the tax rates are given in section 112 and 112A. Which sections? So as per section 112 or 112A, your long-term capital gains are taxable at 12.5% rate. So the rate of tax is 12.5%. This is also a special type of income. Now there are some short-term capital gains which are covered in section 111A. Which section? On these short-term capital gains, you are supposed to pay tax at 20% rate. Short-term, no, hence 20%. Long-term, then it is 12.5%. If it is short-term, then it is 20%. Yes or no? So there are certain special incomes. I am giving some examples right now, like winnings, taxable at the rate of taxable. Winnings income I will write. Winnings income. Winnings income. Then there is long-term capital gain, which is covered by section 112 or 112A. There are some short-term capital gain, which is covered under section 111A. Now there will be some unexplained incomes which are given under section 115 BBE. Likewise, there are many incomes. I have given some examples. Okay. Now, etc. I am writing. Now, if you have included these incomes while calculating your total income, there is a possibility, no, that when you are calculating your total income, in the calculation of your total income, you might have included all these incomes. Yes or no? So, from your total income, separate these incomes. From your total income, separate these incomes, because on these incomes, special rates are prescribed. On these incomes, where? Under the Income Tax Act only, under these sections 115 BB or BBJ, 115 BBJ. Yes or no? These sections of the Income Tax Act, these sections of will only tell you that how much tax you are supposed to pay on these incomes. Can you pay any other amount as a tax? Or you have to pay this tax only on this income? Yes. So, if you are an individual earning this income, how much tax you will pay? This much only. For example, you are earning long-term capital gain, taxable at 12.5%. So, if an individual is earning long-term capital gain, how much tax he will pay? 12.5%. What if the company is earning this long-term capital gain? Even the company will pay 12.5%. Yes or no? What if a partnership firm earning this long-term capital gain? That means the tax rate will not change depending on who you are. The tax rate will remain same. Because for this income, from every type of assessee, on this income, the government wants this much tax. Yes or no? So these tax, the rates of tax on these incomes will not change assessee to assessee. It will remain same for all types of assessee. So if you are an individual, if you are an HUF, if you are a company, if you are a partnership firm, if you are AOPBY, if you are AJP, if you are local authority, if you are any type of person earning any of these incomes, the tax rates are prescribed under the Income Tax Act. That rate only will be applicable for all types of assessee. Assessee to assessee, these rates will not change. Will you remember? So from your total income, separate these incomes. These are known as your special incomes. On the special incomes, you will apply special rates of tax. Special given in Income Tax Act 1960. Now, did you apply the special tax rates on these incomes? Income you are having, from your total income, separate the special incomes. On these special incomes, apply special tax rates. Did you apply the special tax rates? By applying the special tax rates, you got this tax amount. So this is a tax on your special income. So from your total income, on some income, you have calculated the tax. Will you remember this? Yes or no? Will it change assessee to assessee? Or it will remain same for all the types of assessees? Very good. Okay, now whatever balance total income remains. See, out of your total income, if some income is gone as a special income, so whatever balance total income remains, can I say this is nothing but your normal total income? On this normal total income, you will have to apply normal tax rates, which is different for different types of assessees, which is different for, and that is not given in Income Tax Act. For that, you are supposed to go to Annual Finance Act. Every year in the Finance Act, these rates are prescribed. So this time, are you going to learn the Finance Act amendments? Yes or no? Finance Act 2025. So whatever the Finance Act 2025 tax rates are there, hello, they are normal tax rates. They are for different types of assessees, different types of tax rates are given. Those tax rates you are supposed to apply on entire total income, no? Or on normal total income. So on this normal total income, apply what? normal tax rates given in Finance Act 20, because that is the Finance Act applicable for us. Yes or no? Now, will differ assessee to assessee. So, can I say normal tax rates are different for individuals and company, or it will remain same? Individual and partnership firm and company. So now we are going to learn these normal tax rates. Sir, what about the special tax rates? Don't worry about them. When we'll do capital gains, tax rates on long-term gain and short-term gain, we'll learn in that chapter. When we learn income from other sources, that time we'll learn the tax rates of winnings income, unexplained incomes, that time. So for special tax rates, you are not supposed to worry, because these tax rates are anyways going to be learned while doing the respective chapter. Getting my point? But we are supposed to right now concentrate on normal tax rates, which are applicable on the entire total income. Please be very careful in this. Okay. Now, did you apply the normal tax rates? Did you apply the normal tax rates on normal total income? Assessee to assessee, different rates. I will have to remember, oh, this total income is calculated for company. Company, total income calculated. Special income, special rate. Normal income, the rate applicable to company will be different. That rate I will have to apply. Getting my point? Now I have calculated the total income for individuals. Oh, I have calculated the total income of individual. Special income will be special rates. Yes or no? But normal total income, oh, on this normal total income of individual, these are the different rates of tax that I will have to apply. Yes or no? Yes or no? Now, did you apply the normal tax rates on normal total income? Now, by applying the normal tax rates on normal total income, you will get a tax. Can I say this is the tax on your normal total income? This is the tax on your special income. Can you add both the taxes? This is known as tax on total income. This is A and this is B. So tax on total income is nothing but A plus B. Tax on your special income also you are supposed to consider. Tax on your normal income also you are supposed to consider. When you add both the taxes, you will get total tax. That is the tax on your total income. Basic tax. This much minimum you are supposed to give. This is the only amount you are supposed to give, or this is the minimum amount you are supposed to give? Government will take some extra tax in the form of surcharge, in the form of, if you are very rich, then this much tax you will give. No, give us some tax extra in the form of surcharge. Sir, how the government will know that I am very rich? I come to know. You'll come to know. Don't worry. I'll tell you. Okay. But right now, understand the process first. Yes or no? First thing what you will do? You will calculate your. Now, once you have calculated your total income, on the entire total income you will apply same rate. From your total income, separate your special incomes. You have to remember the tax rates applicable on special incomes. Yes or no? You will apply the special tax rates which are given in the Income Tax Act only. By applying the special income on special rates on the special incomes, what you will get? Special tax. Hello. Now from the total income, whatever balance total income remains, that is normal total income. On that, what you will apply? Normal tax rates. They are given in Annual Finance Act. And Annual Finance Act applicable for us is Finance Act 25. So the tax rates, normal tax rates, which are different for assessee to assessee, given in the Finance Act 2025, we will have to remember those rates. And we are supposed to apply those rates on my normal total income so that I can get the tax. So this is my normal tax. Normal tax. plus special tax will give me tax on. Now, if you are very rich, will the government take only this much tax or some tax extra? In the form of, so some tax extra will be taken. So should I add that tax or should I reduce that tax? So I will add surcharge at the rate of dash percentage. And this percentage you are supposed to apply on this amount. This is tax on tax. This is the tax on your income, but the surcharge is extra tax which is applicable on the amount of your total tax. So there is some percentage of surcharge. That percentage you are supposed to apply on the amount of total tax. Don't ever apply this percentage on the amount of, this will be a blunder. And many people in the examination, by mistake, apply the rate of surcharge on gone. Cross, 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 ZERO. 0. Marks which you are going to get. No marks you are going to get. If you apply the surcharge rate on the total, then it is wrong. You are supposed to apply the surcharge rate on what rate? Don't worry right now, I will tell you. When the surcharge will come, don't worry, I will tell you. But right now, you remember that with tax, you will be liable to pay surcharge also. If the surcharge is applicable, add the surcharge to the amount of your tax. Yes or no? So what you will get now? Tax including surcharge or tax excluding surcharge? So now you will get tax on total income including surcharge. Add both the amounts. Yes or no? Yes or no? You will add the surcharge only if you are very rich. But what if you are very poor? Government will take extra tax or government will give you some discount from tax. So there is a possibility that the government might give you some discount out of your tax. See, discount and surcharge, both will not come together. You are very rich as well as very poor, or you can be either rich or poor. If you are rich, then tax including surcharge. Hello? If you are poor, then tax after discount. Hello? Discount will be given from tax. Discount will be given from, but don't call it discount. We call it rebate. What we call it? Rebate is nothing but discount from tax. But we don't call it discount. We'll call it, and that rebate is available under section 87A. Which section, sir? So, from your tax amount only, either you will get, sorry, in the tax amount, either you will add surcharge, or in the tax amount, from this amount you will get rebate. Rebate is available under section 87A. Some rebate will be available. So rebate you are supposed to add or you are supposed to reduce? Surcharge you are supposed to add or you are supposed to reduce? Add. Okay, no? So what if surcharge is applicable? Then don't ever dare to write rebate. Tax including surcharge will come. That's it. Hello? But sometimes rebate gets applied. Then don't ever dare to write. Then surcharge will not come. So can I say surcharge or rebate? Surcharge if applicable. If, when the surcharge will be applicable? Very rich. What rate? I will tell you. Sir, rebate is available, no? Who will get the rebate? When he will get the rebate? How much he will get the rebate? I will tell you. Hello, sir. But right now, are you understanding the process? Please don't shuffle the things. Exactly where I am writing the things, you are also supposed to remember in the same sequence. Don't try to shuffle the sequence. First thing will be total income. Segregate. Special income, special rate, special tax. Normal income, normal rate, normal tax. Special tax, normal tax. Add both of them. You will get tax on total income. In that tax, either the surcharge will be added or rebate will be reduced. Sometimes no, none of these will come. Neither the surcharge will come nor the rebate will come. Surcharge comes when you are very rich. Rebate comes when you are but you are neither poor nor rich. Middle class. Then will the government take surcharge? Because you are not crossing a limit. You are not very rich. Will you get any rebate? No. Why? Because you are not very poor. You are not below a limit. Yes or no? You are above the limit of rebate, but below the limit of. That means no surcharge, no rebate, only pay tax. Getting my point? So now a total will be there. This total will be either tax on total income, including surcharge, or tax on total income after rebate. Yes or no? Whatever is applicable, you are supposed to write like that. Getting my point? Now this tax is there. Now the government would like to collect some extra tax from you for a specific reason, specific purpose. Whenever some tax is taken for a specific reason, specific purpose, that tax is known as cess. Health and education cess. See, it is also a tax taken by the government, but that tax amount is known as cess because it is taken for a specific purpose, health and education. So the amount which will be collected in the form of health and education cess is to be used by the government specifically for health and education purposes. Getting my point? That is 4%. That is, so you will add health and education cess at the rate of, and my dear friends, this 4% you are supposed to apply on this amount, always. Yes or no? So 4% cess you are adding. Now you will get this is your gross tax. Got it, sir? This is the gross amount of tax which you are going to pay. Meaning, how much is your total income? This much. On this total income, how much is your tax? This much. During the assessment year, you will assess the total income, and on that total income, this much is the total tax which you are liable to pay. This much you are liable to, this much tax is charged. Getting my point? Hello, sir. But wait. This is happening in the assessment year. This is happening in the, now you will earn for the previous year. Entire previous year you will earn. Then assessment year will come. In the assessment year, you will calculate your total income. And on that total income, you will calculate this tax. When you will calculate? In the assessment year. Oh, I mean, for the full year, you will earn the income. So full year, the government will sit like this. Watch you earning the income. Oh, dear assessee, earning the income. Wow. He looks very nice. See how nicely he is earning the income. Wow, assessee, wow. Government is becoming happy. Assessee earning income. Assessment year, no. He will calculate his total income, and on this total income, he will calculate the tax and he will pay us the tax. Let that poor fellow earn the income. Previous year got over. Assessee vanished. What is the benefit for using? What is the benefit for waiting for the full year now? If the government is waiting for the full year to get over, let the assessment year come. In the assessment year, that my dear assessee will come, calculate the total income, calculate the tax, and he will pay the tax. Don't you think all the assessees are not this much honest people. Hello? Talk about myself. Government will call me. Hello, Umang. Macha, previous year is over, huh? So now you are supposed to calculate your total income. Assessment year is already there. You are supposed to calculate your total income and pay tax. Yeah, okay, I'll do. First call, number was unknown, no? I picked up. Now I will save the number. Did I calculate my total income? No, I have a lot of work. I am very busy. I am not calculating. Again, the government will call. Again, I will pick up. Hello, Umang, you did not calculate your total income. You did not calculate your tax. Assessment year is already there. See, assessment year is also getting completed. And still, you have not calculated your total income and tax liability was not paid. I will do it. I am very busy right now, taking lectures. Talk to you later. TTYL. After some more days, some more months, government again calls. Umang, this is enough, huh? Hello? 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 Will I pay any attention to these things? Definitely, everyone would try to avoid. Even the government knows people like me. They are not going to calculate their total income, determine their tax liability on time, pay the tax on time. So it is useless to wait till the assessment year to come to collect the tax. What the government does, this is your previous year. Hello, sir. This is your assessment year. Okay, no? One is your previous year, one is your assessment year. In the previous year, 25, you will earn the income. Hello? Whenever you will earn the income in the previous year, no, from that income, keep on paying the taxes during the previous year itself. Pay as you earn. What did I say? During the previous year only, the tax collection will happen. We are not going to wait for the assessment year for the tax collection. Calculations and all, assessment and all, you do in the assessment year, but the tax collection activity will not be delayed. The tax collection will happen in the previous year itself. How? From some incomes which you will get now, the tax will be deducted at source only. The payer giving you that income, we will tell the payer only to deduct tax and give it to us. So for example, I am earning income from KS Academy. KS Academy is a payer. So government will tell KS Academy to deduct the tax on my remuneration. So my remuneration, will I get the full amount of remuneration or the tax will be deducted? Who is the source of my income? KS Academy. At source only the tax will be deducted and will be given to the government, and the balance amount of income I will get. So even if in the assessment year I don't pay tax on this income, the government will be chilled out. No problem. Because on this income, the tax is already deducted and deposited to us. Hello? So on certain incomes which you are going to earn during the previous year, on those incomes, the tax will be collected in the form of TDS and TCS. TDS means tax deducted at source. TCS means tax collected at source. Yes or no? All the incomes or certain specific incomes? On all the incomes, the TDS, TCS will be deducted, or on certain specific incomes? Which incomes? What rate? When TDS will be deducted? A separate chapter is there. We are going to learn that chapter also. Understanding or not? So on certain incomes, TDS and TCS will be deducted and collected. Yes or no? But what about the other incomes? Few other incomes will also be there, and on those incomes, my dear friends, there will be no TDS or TCS deducted. What about those incomes? On those incomes, you pay during the previous year only in the form of advance tax. In the form of, that means on your entire income, the government wants that your tax should be collected during the previous year itself. Pay as you earn. On certain incomes, the tax will be collected in the form of TDS and TCS, and on the balance income on which the TDS, TCS could not be deducted or collected, on those balance income, you will yourself pay tax during the previous year itself in the form of advance tax. That is a separate chapter which we are going to learn. So don't you think on all the incomes which are earning in the previous year, on majority or all the income, already the tax is paid during the previous year itself. Now just imagine if the previous year gets over and in the assessment year, now you calculate your total income and now you calculate the tax. Don't you think this tax which you are now calculating is already paid by you during the in the form of advance tax and TDS? Will you pay that again? So you came to know that this much is the total tax, hello, on your total income. Out of this tax, whatever tax which you have already paid during the previous year, will you again pay that? Reduce that. Minus TDS or TCS paid during the previous year minus advance tax paid during that you will reduce. Hello sir. Now tell me, some balance will remain. That balance will be a huge amount or a very small amount. Even if you don't calculate your total income and don't calculate the tax and don't pay this tax, the government will not feel bad because this is a very small amount. And don't you think paying this much small amount of tax will not be a burdensome for you also? Just imagine if after completion of previous year, in the assessment year, you are calculating the total income for the full year. You are calculating the tax for full year. And that tax is demanded from you at once. Don't you think that tax amount will be very big amount and it will be a burdensome amount for you? And even you will not like paying this much huge amount of tax at once. So that is the reason why government slowly and gradually collects the tax during the previous year. So tax collection also happens. Hello. The government is also not afraid and you are also relieved from burden of paying too much tax at once. Got it, sir? Everyone. So now reduce what? TDS, TCS, advance tax. So now some very small amount of tax will remain. That is known as net tax liability, which you are assessing on your own, which you are assessing on your in the assessment year. So now this much balance amount which remains, you pay in the assess. You self-assess this amount and you pay this amount. So this amount is also known as self-assessed tax. Self-assessee, you yourself assess the balance amount of tax and pay that tax during the assessment year. Getting my point? So for example, if this gross tax amount was 5 lakhs, gross tax amount was, and TDS, TCS during the previous year was 2 lakhs, and advance tax you have paid 2 lakh 50,000. So out of 5 lakh, will you reduce 2 lakhs? Will you reduce 2 lakh 50? How much will remain? Paying 5 lakh will be okay or paying 50,000 will be okay? It will not pinch you. Getting my point? Now, you should have one doubt. What doubt, sir? If your tax, gross tax was 5 lakhs, TDS, TCS was 3 lakhs. How much? And on a safer side, you have paid 3 lakh rupees advance tax also. So total tax is 5 lakhs. Meaning you are actually liable to pay how much? 5 only. But have you paid 5 or more than 5? Prepaid taxes, meaning TDS, TCS, advance tax, they are your prepaid taxes, no? Is it more than the actual amount of tax? How much? Claim that amount as a refund. You will get that amount as a... So it is not necessary that always the positive amount will come. Sometimes a negative amount will also come. And that negative amount is nothing but the actual tax liability was less. Hello? Actual tax liability was less. But as compared to this amount, you have paid more in the form of TDS, TCS, advance tax, etc. Yes or no? So that excess amount which you have paid over and above the tax payable, the excess amount which you have already paid, you can claim that as a refund. That is your refund due. Getting my point? Hello, sir? Sure, no? Now, one very important thing. The tax liability calculation, this entire process is a basic process and very easy to remember also. We have done it logically, okay, no? Please don't shuffle the sequence. Sir, I'm not liking health and education cess over here, sir. What I will do, I will calculate everything plus minus. In the end, I will add health and education cess. 2 slabs. That will be sufficient for you to remember. Health and education cess, not sufficient. 3 slabs you want. So don't try to shuffle the sequence. Please remember the things where I have written. You have to by heart this entire process. Now in this process only, there will be something which will be included. There will be something which will not be required, will be removed, excluded. Yes or no? But this is the basic thing which you are supposed to remember. Understanding, everyone? Hello, sir? Now pay attention, pay attention, pay attention. One last time. The entire process from total income to tax liability, we are going to discuss. We are trying to recollect. I am standing in the assessment year. Assessment year 26. My assessment year is 26. In the assessment year, what am I supposed to do? Compute the total income and tax liability for the previous year, 25-26. For that, I will require the details of 25-26, starting from 1st April 2025 to 31st March 2026. What details will be the basic details which I will require? I will start with the receipts. Out of those receipts, some receipts will be my incomes. I will ignore all those receipts which are not my income, but I will consider all those receipts which are my income. All the incomes are taxable or some incomes are exempt. Exempt incomes I will ignore. I will consider only taxable incomes. Out of that taxable income, all the taxable incomes will be considered for calculation of my total income, or some will be considered, some will not be considered. That is the scope of my total income. Out of the taxable income, some incomes will be considered, some incomes will be left out. Depends on my residential status and nature of income. That is known as scope of my total income. So in the scope of my total income, as per section 5, whatever incomes are covered in my scope of total income, I will take only those incomes to calculate my total income. Now, do I know which incomes are covered in my scope? Yes. Now, these incomes will now be classified into 5 heads. First head is, second head, house property. Third head, business profession. Fourth one, capital gain. Fifth one, other sources. Now, classifying all these income under 5 heads. And now I will apply the provisions of these 5 heads and calculate the taxable income of each head of income. Yes or no? Now, after calculating income of all the 5 heads, I will add the income of these 5 heads. Yes or no? But while adding, I will have to take care of clubbing provisions as well as set off and carry forward provisions. Then I will get a total amount that is known as gross total income. From that gross total income, I will reduce deductions which are available under chapter 6A, and those deductions are available from section 80C to section 80U. After taking those deductions from my gross total income, I will get the amount of total income. This is the amount on which I am supposed to apply the tax rate. Now, from my total income, there are certain special incomes. On that, special rates will be applied. There are certain balanced incomes on which normal rates will be applied. Applying the special rates on special income will give me special tax. Applying the normal rates on normal income, normal tax will be there. Yes or no? Special tax plus normal tax, both taken together will give me tax on total income. This is the basic tax. This is the basic tax, minimum amount of tax which I am supposed to pay to the government. Yes or no? But with this, I will have to pay surcharge. So surcharge can be added. Or from this tax amount, I can get the rebate under section 87A. So either the surcharge will be added or the rebate will be reduced. So I will get the tax on total income including surcharge, or I will get the tax on total income after rebate. Whatever tax I have got, including surcharge or after rebate, on that I will apply 4%. Health and education cess. After applying health and education cess, I will get gross tax liability. From that gross tax liability, I will reduce two things: TDS, TCS, and advance tax, which I have already paid during the previous year. These taxes are known as prepaid taxes. Prepaid taxes, why? Because the tax is charged in the assessment year. Tax is charged in the assessment year. But since it is already collected in the previous year, hence it is known as prepaid taxes. Getting my point? So what are the types of prepaid taxes? If someone asks you, what are the types of prepaid taxes? TDS, TCS, and advance tax. That taxes you reduce from your gross tax liability. Whatever balance amount of tax will remain, that is your net tax liability. Alternatively, you can call it as self-assessed tax. You can call it as self-assessed tax. This amount you come to know in the assessment year. So this balance amount you pay in the assessment year. Yes or no? There might be a case when the tax which you have already paid in the form of prepaid tax is more as compared to your gross tax liability. In that case, will there be any tax payable or there will be a refund? That will be given to you by the government. Yes or no? Now pay attention. Why your clients will come to you? Why your clients will come to you? Because your clients are not aware about these things. As a CA, as a chartered accountant, you are aware about these things. What is to be added, what is not to be added, how the calculations will be done, yes or no? And these are very technical things, no? Just imagine if these things you consider as difficult for yourself. How will you be able to survive? Will you be able to earn your bread and butter? This is the only thing on which your entire future depends. Because whenever you will start your practice, your clients will come to you. I want to pay income tax. How much tax should I pay? Don't worry, I know. With this confidence, you'll be able to speak only if you understand all these things conceptually. Yes or no? And this is just the tip of the iceberg. This is just the beginning of the entire journey of your income tax, you know. It is so interesting subject, and there are so many opportunities in the income tax itself. So many opportunities. You cannot even imagine. This is an ocean. The more deep you will go in this subject, no, there are more chances of you becoming a, great professional later on. But what nowadays the students are doing? The teachers, whatever is going to come in the exams, okay, we are supposed to write down the papers and we are supposed to get passed. That anyways you are going to do. Our ultimate objective is not to just pass, no. After passing the exams, whatever we have studied, we are supposed to actually apply these things in our practical life, because this is only going to give us our bread and butter. Yes or no? So don't ever try to play with your profession, which you are going to do later on. Whatever you are studying, study with consistency and dedication, and try to dig in detail. Go in detail. Conceptually, everything I will teach you. So far, everything you understood. Now, one by one, I will tell you the tax rates. Which tax rates you know? Special tax rates? No. Normal tax rates. Now, normal tax rates, if you'll understand, no, this chapter is over. Okay. But one simple thing, small thing I would like to tell you. See, did you calculate your total income? So, can your total income be an amount like this? 19 lakhs, 39,984. Any amount can be there, no, as a total income. So, my total income when I calculated, it was 19 lakh 39,000. This last digit, it should not be 4, 5, 6, 3, 4, 8, 9. No, it should be 0. It should be, meaning that there is one section, 288A in the Income Tax Act, which tells you to round off the amount of your total income to the nearest multiple of rupees 10. To the nearest multiple of rupees, you are supposed to round off. Meaning, if in the examination, you are supposed to calculate your total income and you calculated the total, everything done correctly, this is the correct amount of total income, still the examiner will deduct 1 mark. Why? Because you did not. So you will have to round off the amount of your total income to the nearest multiple of rupees. Nearest multiple of rupees. Now pay attention. Pay attention. 19,39,980. 19,39,990. In between these two only, your total income is there. This total income is in between these two amounts. Yes or no? So tell me, if you have to round off this 19,39,984 to the nearest multiple of rupees 10. See, wait. 984. 6 steps ahead is 990. And 4 steps backward is 980. Which is the nearest one? Going 4 steps backward is nearest, or moving 6 steps ahead is nearest? 4 steps backward. So round off to 980. Hello, sir. Sir, if it was from 87 till 90, 3 steps ahead. From 87 to 80, backward, 7 steps backward. Going 7 steps backward is nearest, or moving 3 steps ahead is nearest? So round off to. I know what is the question in your mind now. Hey, I know. What will happen, sir, if it is moving 5 steps ahead is also nearest and going 5 steps backward is also? In the life, we always move ahead. In the life, we always move. Our life is moving ahead only, no? We are becoming older and older now, or we are becoming younger and kids. So we are moving ahead, or we are going backward. So if the life moves ahead, so the rounding off should also be, if it is 5, then 5 steps ahead is the nearest one. Yes or no? Hello. So consider the last digit. Always consider the, if 5 or more. If 5 or, then the higher multiple. Then and if less than 5, then lower multiple. Will you remember this? This is rounding off of your total income as per section. So see, whenever you have done your calculations, final calculations are done, you have written your total income 19,39,984. 984, 85, whatever it is. Yes or no? Next line you are supposed to write down rounded off under section 288A. Then round off and write down the final amount of total income. Yes or no? Will you be able to do it? Sure, no? Now, see, no. Can you see this amount? Hello, this. What is this? Net tax liability or refund due. Can I say this net tax liability or refund due is 2,21,113? Can it be like this? Yes. So even your net tax liability or refund amount can be like this, no? So there is one more section. 288, which tells you to round off the amount of your net tax liability or refund due. Round it off to the nearest multiple of rupees 10. Rounding off will be done in the same manner which we have done above. Hello. So this will be rounded off to 2,21,120 or 110. 110. If it was 118, then sure. If it was 115, then done. 288A done, 288B done. Will you remember all these things? Sure. So tomorrow we are meeting. Tomorrow I'll finish with this chapter. We'll do the tax rates and few important calculations are supposed to be done. Tomorrow you are supposed to bring your calculators and the notebooks also. Yes or no? So from tomorrow your real taxation will start. Okay. See you tomorrow. Bye.